folks, the markets are on fire. We're going to be going over my watch list real briefly and touching base on some companies that are very prevalent to me in this moment. We're going to be talking about inflation, why it's a good thing and a bad thing for your portfolio, depending on what stocks you're holding, and so much more in between. So consider smashing that like button, folks, and just taking a look at the broader markets today. We got the Vanguard S&P 500 index back over $406 a share. We could very potentially touch all-time highs here very shortly if these things keep trucking along the way they are. But the entire markets, look at this today, everything's up over like 1.5%. We've got Tesla up almost to $820 a share again, guys. All of my stocks, it's hard to find a red stock in this market today. But let's talk about inflation really quick, because the Fed under anticipated the insanity of inflation. I'm sure you heard that it was at 4%. Well, now it hits a 13-year high at 5.4%. This is largely in part by gasoline prices going through the roof. I mean, you're trying to buy anything gas related, whether we're talking groceries, housing supplies, all of that comes in tandem to the trucking and shipping industry, right? But where this is going to benefit you the most is the fact that the Fed will not be raising interest rates until they're certain that, we're seeing a slowdown in inflation, a coming down. You're seeing job reports come back up. And the reason this is a good thing for the stock market is because low interest rates means a lot more capital to be spent on businesses expanding, things of that nature. Interest rates really heavily impact the real estate market, the utility market, telecom, anything that is largely leveraged with debt. So this is primarily what I think is going to help drive it, if presuming you're holding companies that aren't getting wiped out by the logistics nightmares, the chip shortage, which a lot of these top weighting companies like Apple are proving to excel at right now. And I think this is going to bake into the earnings coming up, which is what I want to talk about very briefly here. Let's talk about Apple, because they just dropped a new event that's coming out on Monday, October 18th. It is weird to be doing this on a Monday, but damn, I am super excited for this, because this is when they're going to be dropping a new M1X chip. And I think Apple is going into this pivotal new phase of their business that is largely being underlooked, because I plan on actually upgrading to the new MacBook. I think one of the 16 inches or whatever the largest one they're going to be releasing is. It's not going to be cheap, but where the valuation makes sense, because it used to be, it was always cheaper and you got better performance buying a Windows computer, building your own gaming device computer, but now a chip, the chip shortage, everything through the roof. It's very expensive to build a gaming computer, when right now people don't realize that the M1 is beating every Intel powered Mac, or basically they're just crushing Intel, any chip maker, because they've integrated this new chip, silicone, all this different stuff into like one little seamless working system that is literally giving better benchmarks than a $5,000 or $6,000 gaming computer for half the price. Like the MacBook Air, the $1,000 like base level MacBook you could buy, was crushing $4,000 gaming computers. And now we're going to be even getting an upgrade, and people are anticipating even double the performance of the M1 with the M1X. I really think that this is giving Apple new valuations behind their products. People used to think it was overvalued crap, but now because of these benchmarks, it actually looks like you're getting a better deal buying their computers than you would any other system that currently exists on the market. This has been one of the greatest technological jumps I think Apple has ever done from a computer standpoint. So I'm going to be paying attention to that event particularly. Now with Tesla flying through the roof, guys, I'm going to be patiently awaiting some of the hype building up into their earnings coming out in about 5 or 6 days here on October 20th. This is largely in part due to the fact that they've been crushing delivery numbers. They're the only auto company right now that is growing numbers against, the chip shortage, when we're seeing GM lose 30% of their deliveries because of the chip shortage. And then on top of that, we just saw Volkswagen say that they're potentially going to cut 30,000 jobs, and something tells me that's just going to be a start, because these companies aren't even really forefronting anything yet. They're just building up plans to get into not self-driving, but electric vehicles, right? And we also saw Elon say that they're going to basically allow any company to buy into their self-driving software if they don't want to work on it themselves. And I think that's going to be very pivotal as these companies realize the real challenge in computer power and the data that it truly takes to pull some of this stuff off. This just gives a higher bull case for Tesla, which is why I think we keep seeing the stock move much higher. So I'm going to be anticipating these earnings. I think we may see a sell the news event here, because again, to see this much momentum heading into earnings usually comes with some selling period after or just before the earnings cycle. Facebook is one that I'm going to be prevalently paying attention to on October 25th, because from somebody that uses Facebook Marketplace, for somebody that uses Facebook advertising and pretty much utilizing all of the Facebook ecosystem, Instagram, whether we're talking WhatsApp, I am really deep into what this company offers. I truly believe that they're powering small town America. They're the only advertising platform that lets you target literal people within your town, whereas I think Google is much more broad stroke. So I love Facebook, but I have a few fears because, I mean, Facebook right now, guys, they're getting screwed in a lot of different countries. In Australia, no news releases. On top of that, guys, they introduced further taxation here in Canada. That recently came out in the last, 3 or 4 months. I think since the last earnings, I got to pay HST. They introduced all these new tax rules. On top of that, they're getting screwed by Apple because Apple's allowing you to opt out of targeted traffic, which I think is one of the most crucial fundamental parts of their business. And considering Apple holds most people probably using Facebook, it hinders, I think, what could potentially be a slowdown in that monetization income, that advertising income, right? So I'm still bullish on Facebook, especially at these price points. I really don't care about any of the scandals going on. Facebook always gets thrown under the bus every 6 months. There seems to be something new to criticize Facebook for. So I'm going to be patiently watching these earnings to see how I feel about the company moving forward. But that's one definitely on my radar. And then we also have Alibaba stock. I do not own this personally right now. I do own it for my parents, and it looks like it is setting up for some good technical here. And let me explain what I mean by this, because from a technical standpoint, the stock has been coming back. It has actually been breaking some barriers here, and it has been slowly uptrending, which is an incredible sign. But because we're not getting any more bad rhetoric out of China, if the rhetoric can slow down, we can get through the ADR fears and all this other stupid stuff that I don't think will have any real impact on the company in the long term. I mean, I'm sure Charlie Munger agrees to some extent, Ray Dalio, very big proponents of this company. I have been debating on buying back into this. I'm just watching the technical setup here, just seeing how the news cycle comes out, because we may have potentially finally hit Alibaba's bottom, but this will get proven out over the next month or two. And if I see it run back up into the 170s, 180 range, I may potentially retake on a position with it. But this is one of those companies where when you see these falling knives, you just want to sit. If you hold the position, just hold flat and just wait till we finally reach what could be a technical bottom. Not that I'm much of a technical trader as it is, but these are just some of the things I'm paying attention to in this market here, folks. And it is fabulously a green day that I will be revealing tomorrow where my portfolio sits, if we're back at all-time highs, what the dividend income is currently looking like, and where I'm kind of shifting some capital around. So consider subscribing, sticking around for that. But in light of all of this, stay cool, stay awesome, and I look forward to catching you in the next one.